Hi, I'm Magma, the official creator of Fear Greed Concepts. Welcome to The Invisible Zone Volume 3. In this video, we'll be discussing how to identify and use trend, POIs with realistic targets and how they increase probability, fractality and how it is misconstrued, backtesting method suggestions, and the importance of philosophy, which, as you all know, is the most significant to me and hopefully should be to you if you're this far into my videos by now. And of course, we're going to be talking about the Invisible Zone Mark II, which is a refined model of the invisible zone. It is not meant to replace the standard invisible zone. It is to be used in addition to. So Mark II is not meant to replace the standard invisible zone. Mark I, it has all of the subcategories, the MIZ, the SIZ, hybrid, the purebred, the pattern IZ. All that stuff is still great. All that stuff on those main time frames, 112, 144, that's bread and butter. Still things that I use every day. The Invisible Zone Mark II model, it has somewhat of a combination of the SIZ kind of mixed with the pattern IZ. If you weren't in my mentorship, the pattern IZ is essentially just a invisible zone that has a non-successful anchor A, so a failure anchor A. So for instance, this low did not run the high that it came from technically on the time frame that we're looking at, but we still get a pattern that seems to make a hump, create an invisible zone with another failure low right here, and then come in between and give us a bounce to continue. This is a pattern IZ, and SIZ is a standard invisible zone that shrinks as it makes its bounces. So when it bounces, the anchor moves from anchor A and B here to A and B here. And if you come down, you can look for an entry model down here if it aligns with the higher time frame narrative, of course, and if you believe that you are in fact tapping into a trend heading in that direction. So the Invisible Zone Mark II sort of combines those things. There's a couple nuances that we're going to be looking at. So with Mark II, we're not just looking at did the low run the high that it came from, but more did it run the external or significant high. So those can be difficult to identify if you're trying to be mechanical about it, but just for conversation's sake, since I'm right here and it's in front of me, there is a low here that has run this high. To me, this high point up here is significant enough to consider. Now, is it immediately also the high that it came from? Yes. So what I mean in this example, and this actually isn't a perfect one, but let's say that inside of here, we had another pullback that occurred that took the high it came from, right? So let's say that on this 2 hour, we have, instead of this, we have a thing that just goes like this. This low runs this high, but it does not run this high. This is a different scenario than what we're dealing with here. What we're looking at is finding lows that run what seem to be the most external highs. Right, so that's another thing we're going to get into in the video, but of course I put up here in the note that each time frame has two trends. There's an internal and an external. So for example, this time frame's external trend seems to be up, but sometimes we find that it looks like it's trying to trend down a bit, right? Or over here, it looks like it's trying to trend down a bit, but we believe that the external trend is up. Here we have a 2 hour low that has run this high. We have our high point comes all the way below and seems to have shifted structure, but it appears to have just gone to a standard invisible zone. Here's our successful launch point. We're going to go ahead and look for our first failure all the way up. These lows failed to continue the trend up higher. Now here caused us to continue. When we look back here on this internal trend, we can see that we start to break structure to the downside, but then there is a low that does the trick on changing the direction for us back to bullish. And it's easy to spot because it's the low that runs the high, and this low runs this high. So we believe that this low is a turning point for us that we can anchor our A to that is going to help continue this trend upwards. We're tapping into the external and we're going to change our internal, because again, look here, it looks like it's starting to try to trend down, right? A little bit of high and a low and a high and a low. Now these aren't candlestick structurally sound, I'm just saying. As you can see, there's an internal trend happening where we're headed down and we're tapping into a space where we're most likely going to go up. Now, we could end up all the way down here, but it's likely that we will not end up all the way down here, because this low, not only did it run the high that it came from, but here's the point, it ran the external high. Now you could say, this low ran the external high. I guess it did, right? But it didn't run the immediate high. So using my understanding of structure, and if you want to get other people's opinions on structure, you are absolutely welcome to go over and look at other people's videos on it. But in my opinion, it is better to anchor A to the low that also succeeded at running its immediate high in these instances, rather than the low that failed. Because if this one doesn't hold, being immediately successful, then this one's not likely to hold either. Though there can be a hat trick sometimes in price where it comes down and it forms a hump here. It comes to the invisible zone that it made. It forms another hump and bounces and continues on the internal model right there. But in this instance, I am 9 times out of 10 banking that it's going to go up from here. This is just one example, but we're going to get into quantifying it. To start with, though, essentially your anchor B on a Mark II is always going to be the lowest tap back after you close above the high. And I'm talking about the immediate high. And before we move forward, I just wanted to say, from a slightly lower time frame like the 12, you can see that the Mark II is also at work right here. Here is what we would probably expect to be a high, and this runs up through it, and here is our tap back before it continues and takes out this higher time frame high, and in that it gives us this anchor B. So in Mark II, it's different, like I said, about the SIZ and the pattern IZ, because the pattern IZ, we're anchoring to points that don't really follow the rules. So for the Mark II, a lot of the times you're going to be anchoring B to a successful low. So in this instance, probably on the 12-minute, we're getting a Mark II working perfectly. It's a successful low to a successful low. This is where we think, oh shoot, we're having a market structure shift, but we're not really. We're coming into the Mark II. Expand it. Let's focus now purely on this 2 hour that we're on and try to use a little bit of candlestick structure here. Now, again, we have a successful low. Why am I calling this successful if it looks like there's a low here? Because there's not. Why is there not? Because this candle never gets closed below. So this is the low that ran this high right here. Now, again, on the 12-minute, we see it looks like it flips, and then it continues up. And again, and this is why I always said when I did the mentorship, and I know there's a lot of drama about it, but we had the meme, if the first flip was fake, then it wasn't actually a flip. And I mean, that still stands true. The meme, controversial, don't want to cause fights, you know, whatever it is. But if the first flip was fake, it wasn't a flip. There was something to it. It was going somewhere. It was doing something, and this is what it's doing. So between our successful low and between there and our lowest tap back, we have our Mark II invisible zone. We're not getting the turnaround that we're looking for, but on this time frame we can clearly identify the internal model low that is partnering up with the external to continue the trend. If I spend all this time talking about this and it doesn't work, I'm going to feel pretty stupid, but we'll just play it out real quick and see what happens. And if I'm right, it should run this high completely. It runs that high completely. It looked like things were getting a little heavy, right? It looked like we kept on falling and we kept on trying to change structure to the downside, 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 right? But every time the market is providing opportunities with these successful lows right here. And that's what it does. And of course, then it runs out our high. Another thing I wanted to talk about real quick is targets now that I'm on that topic. So I put a tweet out about the 1 minute double valid pullback inside of an invisible zone running the 12-minute high. The 12-minute double valid pullback inside of the invisible zone running the 144 high that it came from. So let's try to find an example other than this. We could go back in time or we can go forward. Actually, let's just go forward. That way people aren't like in the comments complaining about it being in hindsight, even though it's literally back testing. But let's just do it to clear all doubts. So I'd prefer if we could find an internal model here. So we're just gonna watch this print. Okay, so we can start to draw out an invisible zone. Let's start with, of course, our low that ran the high. So there are internal lows inside of here as well, but notice that this low happened to run the high that it came from. So to me, I like this low, though it is the external. I also like it because, again, it ran the high that it came from. So this is a good low, right? Now let's watch. High, low, higher, high, low, higher, high, low, higher, high, low, higher, high, low. And then look, it looks like this is the failure. So we're just going to go ahead and leave this on here. Now, I'm not putting this on here because I'm looking for a 2-hour opportunity, because I'm going to be looking on the 12-minute to try to find it. But in theory, if we are tapping into an invisible zone, that is going to help us continue the external trend. Then that invisible zone should cause us to run this high right here, and we should be able to see it happen with either just a single 12-minute double valid pullback or maybe an internal model that creates a 2-hour double valid pullback. But either way, if we tap into this invisible zone and we get that entry model pattern and it fits the bill on the trend, then that is the target. It should take that out. Where we took trades down at the bottom and held them all the way up because they were phoenixes, right? You all know about the Phoenix. Play this out a little bit more. Okay, so we're getting a touch right here. We'll go ahead and play it out and then look in on the 12. So low, high, low, and then this low runs the high. Now I'm expecting that we're gonna get whacked here by this IZ just for a moment. All right, now we're coming down. That's pretty heavy. Could be dealing with an SIZ, but I'm not gonna ignore the internal model if it appears. So we're just gonna leave this here just in case, in the instance, right? And we're going to go ahead and mark out our Mark II. So this was a standard, right? But we're going to go ahead and also mark out our Mark II. So let's see. We close above, and then where is our lowest tap back after the closure? This candle right here closes. This is our lowest tap back. We're going to go ahead and just leave that on there. Now, this seems like it's probably not going to get down there, but if this happens to run all the way down to the bottom here, then it most likely will come deeper into here. So let's just go ahead and check the 12 and look and see if we can get an entry opportunity. We're going to anchor to our 2-hour because we're trying to find a 2-hour internal invisible zone, right? We're going to anchor to our 2-hour, and we're going to go ahead and also anchor to our failure on the 12 here. So we're going high, low, higher, high, low, higher, high, low, higher, high, low, and then this one fails to send us above with closure. So this low, we're going to anchor to right here. Please. It's not hindsight. This is just how it works. Okay, I know we're touching this right now, but we could very well just bulldoze through it, right? If I had to guess, we have a closure right here, so the Mark II idea could be in play where this low runs this high, and therefore we must come below the tap back. That's likely. Now remember, the invisible zone doesn't aim to try to be to the tick tap. We're looking for it to take a dig into it and make a double valid pullback for an entry model. So let's watch for that. Sweeps it out right there, perfect. And it does give kind of a pullback, and I'm watching for greed to really kick in here if I want to get a buy, because this is a big dump down. I really want to see the greed kick in. Why did we switch to 1 minute? Hate it when it does that. That's pretty good so far. Now, let's see if it can come back for us. So again, guys, by the way, I'm trying to show you the Mark II model here. So don't get distracted and just be thinking in the mindset of the invisible zone standard, right? I want you to be thinking about how it has to come and take these lowest tap backs. It's not always the case, but whenever we have a 2-hour low or I should say a 144, which is what we're actually trying to use. If you're watching this and you're like, what the hell, why is he using the 2 hour? FX Replay does not have the 144 for some reason. We've all been messaging them, begging them to give it to us for a long time, and they still won't. So we're just doing what we can with what we got, right? But here's our invisible zone. Here's our Mark II concept, which is that we have to run this out. Now, does it get all the way down to the 12-minute Mark II? So far, no. It could, but the way it's acting, it looks like if we can get a second pullback on the 12, remember, this is just, to me, more like one pullback, because if you're looking at this low down here, how it gets run out with closure, there's a reset. And remember what we're looking at. We're looking at a 2 hour low that has run the 2 hour internal immediate high right here. And we have our lowest tap back that has just gotten swept and given us a pullback. So now see it come down, hopefully into the range of the lowest candle. And we'll call the range of the lowest candle just right here. So boom, we're already inside of there. And now I would anticipate a pullback that would provide a long. And if I'm going to take the long, here's the idea. We're running the 144 high. Now, do you have to make this your target? And I'm talking about the external, the successful, the send down into this area. The one that looked like it was flipping price to the downside, right? The one that looked like it was flipping price to the downside. We're going to take our time and watch, and we're going to not get greedy and take profit at reasonable areas. But I will say, if we're looking at our 2 hour, we have some pretty clear targets. And one of them is this. And the other one for the runner is this. Now, this one, if we do turn around here, this one's a given. This is an unsuccessful high anyways. So this one's a given if we can get a second pullback on the 12 here. And I'm just trying to break this down for you guys. I know it's long-winded, but I want you to see what I'm thinking when I'm looking at this, right? So we're wanting to see this run at least here. And if we're right, we should go all the way through here. Now, guys, that there is something of a supply zone right here. So this looks to be pretty heavily mitigated. On top of that, this being heavily mitigated would also indicate that this high is less likely to hold anyways. Now, this one up here, not so sure about. Do I have to hold it all the way through this to make money? No. I can hold it just up to this or even halfway there to make good money. But let's continue. Back to the 12. Play out a few bars. Okay, I like this. This is what we call a layup candle. It means price is giving an easy objective for a pullback. Let's see if it gives us the pullback. And it closes it right there. Kind of a weak closure, but this would be a perfect time to go ahead and put some on. And I'll go ahead and put 2 on, because in this example, I'm saying we've got multiple targets. So first thing that we're looking for, again, this is, a lesson in the basics, and I shouldn't even be, talking about this, but I mean, I will mention it. This is our apex here, right? So we're looking for this apex to get taken with closure. If our apex gets taken with closure, then we're looking to take at least, especially this 2 hour failure high out, like we said. Now, if we pull back before closing that, that's a red alert. That's when I start to potentially consider getting out of the trade, because I think it could come down here, right? But if we can take our apex, we can at least, at the bare minimum, get to our invisible zone right here at the bare minimum. Now, if we can get to that invisible zone and it looks like that's not really somewhere that we would be thinking we're going to tap into a downtrend, especially because we're coming from this higher time frame trend up, this external trend up, I would say that this trend up is stronger than this internal temporary trend down, especially because we're just looking at the 12-minute, but let's go ahead again and look at the 2 hour here. On the 2 hour, we're closing higher external highs and lower external lows. We're trying to find the spot that is going to send us to close an external higher high. Get it? We're trying to find the spot that is going to send us to close an external higher high. And we believe that this one is it because it is an invisible zone. And on the internal model, again, we believe that we are following Mark II protocol, which is to go below the lowest tap back. And so we're going to just play it out and let it go. Now, once it closes apex, when it gets up here, I would consider taking profit. If it does a pullback before we close the apex, I'll most likely take the trade-off. Okay, so look at this right here. We did hit this invisible zone and make a pullback. Now that would be scary to sit through, right? It's then 50 points. Magma, if I get in right here and it gets all the way up here, can't I just take profit at the invisible zone? Yes. I think you're an idiot if you don't. Honestly. I mean, this is a great place to take profit. An opposing invisible zone, always an incredible place to take profit. Would I commend you for taking a short from there? Only if you were really experienced and you didn't try to hold it to continue the trend down. I'm not taking profit partials until we get up here though. Okay, I like that we kind of closed above this high barely. It looks Swedish though. Let's see. Okay, pulling back to the upside still, and we take it right there. So I'm going to go ahead and do 50%, and now we've got two targets. So let's say in the perfect world I had 3 contracts. This is a good one to take it off at, and this invisible zone is a good one to take it off at. If you're holding it to the high, you are just a very hard-headed person. You probably have a lot of ICT background experience, and you should seek help immediately. You don't have to hold these to the high all the way. If you get that many points and then you try to hold it through this for another 60 after getting 300 and you lose, you deserve to lose. Let's take it to the opposing invisible zone. How about that? Let's go ahead and refine it using the 12 because we can. And again, remember, our target is at least this successful high that sent us down. Now, I don't know what's to the left here. I haven't mapped it out, but we could be running into some sort of invisible zone over here. It doesn't look like we are, just looking with the naked eye, but I don't want to happen to have run into an invisible zone, made a double valid pullback, and started trending down externally and not know it yet, right? So I am going to take it off either here or here, depending on how it's moving, but let's look for a closure. So let's look for this successful low to cause this low to be successful as well. That's beautiful. Okay, let's see how it moves. We're on FX replay. We can hold it to here if we want. Get back to the 12-minute. The true ultimate target is here, but again, we don't have to hold it all the way there. And let's watch how these candles move. Little pullback. See if we can continue up, push through with closure. Okay, now this right here is a perfect place to take profit. If you take profit here and it goes higher and you feel like you're leaving stuff on the table, then you've got to get that worked out because that's an amazing trade right there. And let's see if it does complete the cycle anyways. Little pullback right there at that invisible zone, another 50 points. Again, see, look, we've got the invisible zone right here giving us a bounce down. We've got the invisible zone here that I do believe had given us a bounce down. It was right here. And then we've got this one that gave us a bounce down, but it looks like we just touched it. I mean, this is enough anyway. So for it to have taken that out, that's what I mean. Do I mean it has to go close above it? No. What I mean by taking it out is just by going and touching it to the tick at the very least. And then we close it anyways, because it doesn't look like we have an invisible zone over here right now at the time anyway. So this is a beautiful spitting image of structure, by the way. So that one, though, on the internal, it did follow the Mark II protocol. It didn't necessarily use up the entirety of the zone. With the Mark II, you're going to see that a lot. So one thing I wanted to say about the Mark II, this is a much more discretionary tool. It is only meant to be used by people who are already profitable with the standard invisible zone, who are already pulling money out of the market with funded accounts or with live accounts, and they want to up their game by adding this into their tool bag. This is for you. This is not for the person who just got introduced to my concepts a week ago. Right now, you need to focus on the basics. So you're watching this and you are experienced though, you need to know that this isn't always going to give you a nice little 1-minute double valid pullback. These are the kind of trades that take you from great to professional. But in those trades, you're not going to be seeing the same kind of entry model confluence compared to the level of narrative confluence that you will be seeing, right? So you're looking typically for a couple confluences to be there on a standard invisible zone. You've got the external trend in your favor, the internal aligns with it. You've got successful and failure highs or lows that you're anchoring A and B to, and then you get a nice clean double valid pullback with closure. And then it takes the apex and you just carry on your merry way, right? But then sometimes it just taps it, especially if you're trying to use this on lower time frames, right? Sometimes it just taps it. Sometimes it can even go all the way to the bottom of it. And you think, okay, well, is that supposed to be DMV? No, you've just got to use your discretion and start to step into the understanding of market structure. But again, this is a good example, even though it doesn't come down to the 50. Think of the Mark II. I think this will be better. Hang on, let me go back to the 12. I want you guys to think of the Mark II not as a fib tool. I want you guys to think of the Mark II as a box. It can come to anywhere in this box. A lot of the times it's barely going to tap into the box. Sometimes it's going to go so deep that you think it's not going to hold. And then the other times it comes right to that 50%, okay? But the Mark II is not about the midline of the zone. It's about the zone in general and what it represents. What the zone represents is this getting swept out, this lowest tap back into that successful low on the 2 hour. Okay, we are going to go over a couple more examples in a bit. I just want to make sure to touch on these points for a second here. So identify and use trend. What are we doing here? We're identifying that the trend externally is up, and we're identifying that internally we're trending down, and we're looking to find a place where this internal trend is going to change direction. So we're in favor of playing the external trend more than we are playing the internal trend. And oftentimes the internal trend will do what looks like a flip or a shift in structure or trend in the opposite direction just to get to the invisible zone. Next, I want to talk about the POIs with the realistic targets and how they increase probability. So I said, if we have somewhere to be, we're more likely to go there. What I mean, and what I was saying about there not being an invisible zone right here on this side, is that we seem to have higher to go before we think about actually changing trend externally on the 2 hour to the downside, right? Because if I'm just marking this top out here, and let's say I'm marking this latest high that did not send price to change trend to the downside right here, I have not gotten close enough yet to my invisible zone to even start to consider that we're looking to go bearish long term on the external on 2 hour. Right? So we've got somewhere to be. We've got multiple places to be on the internal on the 2 hour as well. Let's look. Right here was an invisible zone touch. Again, a standard invisible zone touch. Where did we have to be? We had to be up at this invisible zone / supply zone, whatever you want to call it, order block. Maybe there's an FEG here somewhere. I don't know. We had somewhere to be, right? From here, we also have somewhere to be. Where do we have to go? We have a failure high to go to, because we're making pullbacks. We believe that a 12-minute double valid pullback leads to a 144 single pullback. And if we're pulling back here, then that would make this a failure. And if this is a failure, then we're going to go ahead and run it, right? So we believe we're going to end up forming a 144 pullback, and we're going to run this failure high. And then we've got an invisible zone. You could even call this just an SIZ right here. I would be kind of careful trying to do something like that in this scenario. And you've also got an invisible zone up here. You've got a supply or demand zone, whatever, as well. Okay, there's stuff up here to go to, right? So we can go there. So knowing your target. I saw a guy post on Twitter today. Hang on, let me try to find it. He said deciding when to exit a trade is typically more challenging than deciding when to enter a trade. Agree or disagree? To that I said, the less sure you are of your TP and SL, the less likely you are to win the trade. And that's what I mean here. If you happen to get yourself into a trade, and there was a guy in the group, and I'm not proud of the way that I handled it. I really got after him, but I just really was invested in his success and cared about seeing him win. And he kept on doing this stuff that just, it was not good for him. And he got into a trade and he asked me about like, where is our target and stop loss? And he got into the trade on evals. I'm like, man, you gotta, like, you can't enter a trade without knowing, right? You can't enter a trade without knowing where it's going to go, where you expect it to go, because you're not paying attention to the fractality of it, which we're going to talk about fractality in a second. You're not paying attention to the fractality of it. You're not paying attention to the fact that maybe in this scenario right here, we've got a high, and if we make a pullback here, we know that that high has now failed to run this low. And so If we get a double valid pullback on the 12 minute, we believe that we're making a 144 pullback. If we make a 144 pullback, that makes us a failure. If it makes us a failure, we're extremely likely to go to it. If we're likely to go to it and we've already mitigated this zone, this invisible zone, this supply zone, then we're probably going to run through it, right? So there's a whole bunch of different things. Now, I said, if we make a pullback before we take our apex in here on the 12 minute, if you remember, I know that I should get out. Another thing that would get me out of the trade is if we came down and we closed below this 12 low. Why? Because that means that the double valid pullback is disqualified. Why does it matter when the double valid pullback is disqualified? Because this is no longer an apex. This is no longer an apex if we close there. This is something different. This is what they would want to call, let's say, a protected high if we close below this. Now, it is not protected, okay? There's no institution protecting the stop loss, but we would have a high here that was successful, and so we wouldn't necessarily be looking for it to come back up and take that immediately, but if it did, we would then look for an invisible zone right here to take the trade from, right? Because then we've got a successful low there and we can form an invisible zone and get a double valid pullback on that lower time frame here. But that's not what happens in this scenario. We get a beautiful 12-minute double valid pullback inside of the 144 zone, and we get to push all the way to the top, to the 144, to the 2 hour that sent us all the way down here. Because we have places to be, we have a trend that we're tapping into, we have internal confirmation, we are following Mark II protocol by sweeping out the lowest tap back. I mean, it doesn't get more perfect than this. Like, I'm just actually, it's beautiful almost to make your eyes water a little bit, right? So let's continue and see if we can see a higher time frame example. We'll call this like the 1728 or the daily or something, and we'll say that we've got an invisible zone right here because we've got a high that did not send price externally to change trend downside. So we'll put this one right here. Why am I not marking to this one? Because this bounce sent price out, okay? It sent price out of the zone. Let me remove these internal drawings real quick so you guys can see clearly. We came up into it, we bounced right out of it. So therefore, we're going to go ahead and leave this here. Now, as we climb up, we'll look for a 2 hour double valid pullback. And again, I personally want to be looking for some Mark II examples, so that's what we're going to be hunting for here. Okay, oh, wants to come a little bit higher. I thought maybe we could get a double valid pullback here, but it looks like just the way that it extended itself like this isn't something that you want to take, especially when you're not yet touching the invisible zone. So we continue to hunt for it. We're getting one pullback right here. Go ahead and mark that out. Now this is important, by the way. This right here is important because this is a successful low that launched us up into this invisible zone. We're wicking, and then it looks like we've made another pullback right here. Okay. For me, seeing this, and let's go ahead and actually look at the 12 minute real quick. So what I want to see is I want to see the 12 minute give us the pullback inside of the 2 hour pullback, and it looks like that's what we're getting pretty sharp here too. So this is something that looks good for an opportunity to show how the invisible zone, even though we have a big bullish trend, the invisible zone way from the left can do some work on us. So let's see if this works out. We'll go ahead and hit sell, and we believe that because of this pullback, we have an invisible zone right between here and this failure low. This low failed to run the high that it came from. We have an invisible zone right here for 83 points, but more importantly, we do believe that we're actually going to go ahead and run this out if we are right. If we're right about this invisible zone, if we are tapping into this higher time frame's external trend down, then we will at least run this. Now, can this invisible zone trend up here, or can an invisible zone from here in this area, can it overpower this external? Yes, this is fresher, right? This is more relevant in the market. Price action is definitely behaving like it wants to come up and run this, but if you were trying to be counter trend and take a short, you would look for this spot to do it. Right? You look for this spot to do it. So we've got our targets. Let's switch down to our 12. Let's watch it play out. Nice. Takes apex with closure. I guess it already did when I got into the trade. Pull back there. It'll be okay. Right. This is a failure low. There's no point in this holding. Want to see this get swept. Almost there. Middle of the night. Okay, cool. Let me go ahead and take partials there. Now, since we're on the 12-minute, let's just go ahead and look. I'm curious to find, we have this 2-hour high that we talked about, the successful 2-hour high. And what is it that did the trick for running this? This low here? Let's just go ahead and use this just for shits and giggles. And I'm going to start with standard. I don't think that this is clean enough to use Mark II protocol right here unless we were looking at the 2-hour. So I'm going to go ahead and take this up to the failures, which will be here. First failure right there. This is just a standard. I know that's not what this lesson is about, but we're just going to put it there. It looks like we actually have a low that did a great big run up, and then we have a tap back right here. So we could, following Mark II protocol, most likely just need to come down below this and then go, but it's possible that we could even have to come all the way down below this. Right now we're in short, so that's what we're focused on anyways. Oh, did I take off 100%? Damn, I meant to take off 50. Well, anyways, just pretend that I have one more contract and then I'm going to try to hold it to here, okay? Win or loss. That thing is dumping through it. That's perfect. Check it out. We tap into an IZ. We come and we run through this successful low. Now everyone is freaking out, and not only that, but everyone is looking for shorts. They're thinking, okay, this higher time frame has given us a shift to the downside, but let's pay attention to our Mark II protocol here. We're sweeping this out, this successful low. Always can use the lower time frame to refine. It would be crazy if you didn't. I mean, no one wants to just put a trade on right here with a stop loss here, right? So we're narrowing down using Mark II protocol. Let's just get rid of this for now. Using Mark II protocol, we're looking for an invisible zone touch here. That was close enough. I'm disappointed that it didn't, but again, it's a zone. Remember, Mark II protocol, we're dealing with a zone. So we've come here, we're sweeping this out, we're making a pullback. Maybe it comes lower, probably not though. No, we're tapping into our external trend up. This thing is running that top. Did it give it to us? What did I say about that Mark II protocol? It can come deep down into here. It can barely touch it, right? It can barely touch it. It can deep down into here, either one. But again, this thing looks like it's trying to say it wants to come down, but if you look at the external trend is showing that we continue to push higher, and especially not closing here with this wick. I mean, this thing, like, you almost just want to buy this thing, right? Just buy this thing and take it up there. Wicking my entry. Look at that. Let's take it off. Take off half of it. Up here, probably smart to take it there. We've probably got an SIZ right here. It's likely to run the top anyways. It's acting like it wants to. I took it off right there because I could see that this was an SIZ. Little tiny bounce. All right, there we go. Perfect examples right there. You couldn't ask for better examples. I didn't plan this. I just went 4 years backwards. Okay, let's move on to fractality and how it is misconstrued. So price does not move the air quotes same on each time frame. And the way that I teach people to learn how price moves is simply by going to each time frame and playing them out on high speed and studying them. And I like to make it a little bit more interactive. Otherwise, you could probably just end up getting on your phone, getting distracted. So not with boxes or lines, but just with the highlighting tool. I like to kind of note the movement of price with my hand, sort of trace it to dig it into my brain, and also circle invisible zones or potential invisible zone spots, right? And this will help you get a feel for how price moves. It's important to do this because if you're looking at the 1 minute or the 5 second or the 12 minute or the 144 and you're thinking, okay, this is familiar, I've seen this before, but your memory is actually pulling from a pattern that you recognized in a different time frame, you're gonna end up losing some trades based on that pattern recognition or having your narrative wrong at the very least because of that. And that's just because, again, the price doesn't move the same. The way that a 12-minute ends up being printed is going to be much more rational than what a 1 minute will be printed like, because the lower the time frame, the less rational the buys and the sells are. The less rational the fear and the greed is. Okay, so when you're looking at these lower time frames, you're seeing a bunch of idiots buy where they shouldn't and a bunch of idiots sell where they shouldn't. When you're looking at the higher time frame, the moves are more structural and certain and to the point because it's the culmination of all of the rational decisions made throughout that day or that week or month that add up to that candle being printed, right? Or even just that couple hours. This actually also touches on the topic of backtesting method suggestions for beginners. I want you to just watch this. I want you to take your highlighter sometimes, and I want you to mark out invisible zones, what you think an invisible zone is. I don't want you to be going and watching the fundamentals, highs and lows, over and over and over again and trying to figure out, like, okay, is this candlestick structure right? I can't figure this out. I don't understand why. Magma, hey, I know that you closed the mentorship down, but I was hoping I could get a bit of your time and ask you a question about, I saw that this low was valid, but then it got run even though it ran the high that it came from. Why didn't this work? If you're new and you don't understand that to begin with, you don't need to be doing that in back testing or in forward testing. All you need to be doing is drawing circles. At the most, drawing circles. Doing math in your head. When it does this to this circle, what happens next? When it does that to that circle, what happens next? Right? And I want you to practice in this manner for a long time. Longer than you think. Longer than you're thinking is longer than you're thinking right now. Meaning, if you're sitting there thinking, oh, he doesn't know how dedicated I am and how much I can grind. Yes, I do. It's not enough. Do it more. You need to burn this into your head to where you're seeing it not when you're asleep. That is beginner baby food. When you're awake, you should see the charts. They should be burned into your head like somebody took a flash photo of you in your eyeballs. Okay? That is the extent I want you to take it to before you start to move on to the next. Now, in backtesting methods, from beginner to advanced, and let's say after beginner, we've got intermediate. All right? In intermediate, slow down. Right? I want you to slow down and I want you to start marking out your valid highs and your valid lows. And I want you to start using the boxes for invisible zones. Okay, so it's an upgrade, right? See that? It's an upgrade. We're working our way up and we're trying to refine. Now you can go on high speed, but I would also suggest slowing down at this point and starting to pay attention to the models themselves on the internal or on the external, depending on what time frame you want to use for it, right? You're going to be looking for those and slowing it down and going bar by bar and marking out highs and lows. So how I want you to do marking out highs and lows is you're learning to use these tools, and one of my favorite tools is the trend line. And this is how you mark out highs and lows. You're going to take your highest point and you're going to look for a closure below. You're going to mark the top of it and the bottom of the candle, okay? And then you're going to take the lowest point, you're going to mark the bottom of it, and you're going to mark the top of the candle that gets closed above, okay? And so on and so forth. We've got one right here, we've got one right here, one right here. Okay, one right here gets closed above, not until right here. Make note of that. What happens? Interesting, right? Interesting that we put this candle in, and then when we fail to close, we get a send down all the way back here before we go and take a run. Once we do close the pullback, we make a high, we pull that back, we make another low right here, and this low goes ahead and it runs this failure high. So we're paying attention to how the candlestick structure works and making sure that we have it perfect where there's never any mistakes on marking these highs and lows out, okay? And you're going to be also marking out invisible zones. So learning and understanding on a deep level what is a successful low, what is a failure low, or successful high and failure high. Here's a successful low right here. This low runs this high with closure, and we tap back right here, and then we come down below that lowest tap back into the Mark II protocol area, but also happens to be an SIZ. Like I said, sometimes it's an SIZ, sometimes it is a pattern IZ, and we make our push, right? So we're using a box, we're marking this out. Now, advanced, I want to see you guys practicing SIZs. I want to see you guys practicing MIZs. I want to see you guys practicing the marking out both invisible zones at the same time. You can go ahead and throw the fib on there and play around with levels, whatever resonates with you the best, right? And in advanced, that's when you're going to start also looking for double valid pullbacks and mentally taking note of where you would enter. You can also enter on here if you want, as long as you're not spinning your wheels doing that and getting addicted to, okay, every day I just want to come in and, get my satisfaction from the market by taking trades on backtesting and, oh, look, I'm right, and then you can't actually do it in the live market. Don't get yourself stuck in that hole. but you need to always make sure that you're paying attention to learning. But I have kind of already pointed out a lot of these nuances for you, so it's not like you need to be doing research and development, so to speak, but you do need to be paying attention to what's going on, and you do need to be at least mentally noting where you would think to get in a trade and where you would think to get out. And maybe if you want to take a pen and paper and write down how many times you're right or wrong to help you build data for confidence for taking trades on live market, or if you want to take them on FX replay now that they have the market buy and sell button, thankfully, on the NQ pair. You can do that. There's a whole bunch of different options for you, but advanced, I want you marking out your highs and lows. I want you drawing your invisible zones. I want you to be shrinking them. I want you to be using Mark II protocol as well. I want you to be noticing the levels that these things are going to inside of the zones, right? And in some capacity, at least mentally practicing executions, stop losses, TPs. Things like that, okay? You need to do that because you need to build confidence in your ability to trade this. If you don't, then what's going to happen is you're going to get into a trade, it's going to go a little bit in the red, you're going to take the loss, it's going to go in the opposite direction where you would have won a bunch of money, you're going to be pissed off, you're going to go on tilt, you're going to blow the account. So it's very helpful to have the data behind that to build the confidence to say, you know what, I know that I can trade this. And if you're not a person who likes to take trades on backtesting, I don't do it all the time anyways myself. Most of the time, when I learned the invisible zone, I never took trades on it. I only started doing it for fun because, and for example, but before that, I would just sometimes put the short or long tool on there, or sometimes I wouldn't even do it at all. I'm just marking my highs and lows and the top of the low and the bottom of the high. Yeah, I would say more important is just to take mental note. But if you need those stats to give you the confidence, do them. If not, you need to be trading paper for a while until you have that confidence, they have the understanding, and you have proven to yourself that you have a high win rate. Now, importance of philosophy. This is going to part the Red Sea here, I think. Look, guys, we don't know anything in life for certain, right? We don't know if we're a lizard on a rock having a daydream. And so, the importance of the philosophy. We are functioning off of the idea not that there is an algorithm that is capitalizing on your emotions. We are functioning from the perspective that human emotions themselves are what is actually moving the market. And the ones who have rational fear and rational greed are the ones who buy and sell at the right times. And the ones who do not have rational fear and rational greed are the ones who sell and buy at the wrong times. Those are the irrational people, which is why I always tell you guys, and why I've been saying this for a long time, I had to take this whole stand online, anti-scalping and everything, not because I never, if you go back to the first videos that I made, I didn't say that you should never scalp the seconds time frame. You can go back and find this and quote me on it. I'll try to paraphrase, quote myself. I said no one should be trading the seconds time frame until they can make a full-time income using the higher time frame. That is because the lower down you go, the more irrational stuff you're going to see. You're going to see a lot of wicks and a lot of, oh, we're making a high here, making a low here, when we're not really supposed to be making highs and lows at those spots, right? Because that's not part of the rational move, the actual move in the market for it to go short or for it to go long or for people to be selling or people to be buying, right? You get a lot of smaller money buying it up right here when they shouldn't, and boom, there goes that smaller money. Guys, hedge funds lose money every day. A lot of money. There's hedge funds that lose billions of dollars sometimes, right? So you've got to beware of, when you get down on those lower time frames, the fact that the structure that you think you're seeing, it's going to get absolutely demolished by the move that's actually happening on just one time frame up or two time frames up. Okay, so that goes back to the idea of fractality and how it's misconstrued too, because price doesn't move the same. To some people, they may look at it and think that it does. I know that there's going to be people who just trade based off market structure alone, supply and demand alone. They're going to argue with me, shake their head, think I'm wrong. That's okay. Everyone has their opinions. I am certain that the flow of the price on each time frame does not move with the same spirit and manner and shape as everything else, not in the way that people think it does. Back to the importance of philosophy, understanding that we are buying where people are going to feel the most greed, and we're selling where the people are going to feel the most fear. People, not meaning the retail money necessarily, but meaning, your mom and dad's salary for their entire lives has been going to Goldman Sachs or JP Morgan. A percentage of it has been going to Goldman Sachs or JP Morgan. And everyone that they know, and everyone that they know, and everyone that they'll ever know who has a job has money going to these firms or banks in some capacity. And this money is used to do exactly this, right? But there's people behind the decisions of buying and selling. Very, very calculated people who are trading from a position of power with a lot of money. And they're making decisions not to try to take out your prop firm stop loss. They're making decisions to try to capitalize on the opportunity to buy when the price is lower than it should be, and then sell when it goes high enough to take profit at places typically where it was previously sold off before, right? And that is the theory of the invisible zone, is that there's going to be fear felt in the space where everything was previously sold off, and there's going to be greed felt in the space where everything was previously bought up. So for instance, let's go on the 2 hour here. When we were down in this area, price launched up all the way above this high right here. It launched up all the way above this high. Let's go ahead and measure it out from here. That is 900 points. Okay, so when we tap below these lows, we are tapping into this space where there's going to be big greed. Why? Because everyone wants a piece of that pie. This area tells me that price is continuing up. So when we come into this area, I want to buy it. Think about if you were looking at a stock to buy. Think about if you were looking at a crypto to buy. Do you want to buy it up here, or do you want to buy it when it dips, right? Do you want to sell it right here, or do you want to hold and think, no, it's going to go all the way up here and through this, right? And how far extended does it need to be? You can do your research on that. It could be some standard deviation stuff or fine bond projections from that guy Tristan on Twitter, whatever it might be, right? There's a lot of different theories, and a lot of them are actually pretty spot on sometimes, so not knocking them at all. We're buying at the places where price gets bought and gets run up previously, and we're selling at the places where we expect people to be fearful of losing, right? So they're not going to be willing to buy, and they're going to be more willing to sell. As we get up into this area, we start to see some turbulence, right? Turbulence. 170 points, turbulent, 240 points, but then look here. This is a confirmation that it is failing to send it down. We make a pullback here, and we can run that top out. Beautiful. Now when we come below these lows, we're launching up again. Why? Greed is here. Why did we go down? Fear is here. What was right here that made us take the top? Greed was right here to make us take the top. So that is how we want to look at the market. We want to look at the market from the perspective that you're trying to think like an investor. You're trying to think like somebody who, when you're pressing long, you're trying to think like someone who's actually pressing buy, and you're trying to catch an appreciation on your asset. When you are shorting, you're trying to think like a seller who is holding shares of NASDAQ and is seeing that it's probably reaching an area where there's going to be a sell-off from others. And so you don't want to be the last one off the train. Thinking like that will help you. And if you want to get a grasp on the philosophy in greater detail, you can go to the philosophy video. I'll put it at the end of this video or on the top of the screen or something like that, whatever I can do on YouTube. But just to be clear, let me draw up a couple models so I don't have to do another video clarifying this. We're just going to draw it up real quick, and then we'll be done. For the Mark II, we have a break of structure in this internal. This low runs this high that it came from successfully, and oftentimes we see it run an external high over here as well. It comes back. It looks like it's flipping structure to the downside. It looks like it runs through the standard invisible zone, but really it's coming to the Mark II zone for the bounce. And the Mark II, here's your standard. And the Mark II, after we close this high, we happened to get a wick that came down to right here. Okay, after we close this high, we happen to get a wick that came down to right here. So instead, our Mark II is right there. And that's how it works. That's the Mark II model right there. Okay, now is it always the 50? No. Sometimes it's here, sometimes it's here, sometimes it's here. You need to do your due diligence on looking at different time frames to figure out how you can get in on this. I've done my job of sharing this with you for tapping back into here, okay? But remember what to look for. Oftentimes you're going to see it give what looks like an internal shift in structure where we're starting to go the other way, but we're just tapping into the trend from the external, and it's going to catch it right here or somewhere around here. Okay, I'll be very curious to see what you guys come up with in the Discord. It's free now. The link will be in the description. It's not a mentorship anymore, but it's more of a community. Sometimes if I'm feeling like it randomly, I might do a stream here and there. I'm going to start doing some streams on YouTube occasionally to answer some questions for people. Stay tuned for that. And as far as closing down the mentorship goes, again, guys, I'm sorry if it's inconvenient timing. Please stop asking about getting access to previously recorded live streams. We're not giving out access to premium videos. There would be no point in those people having paid for the information if everyone else gets to come in here and get the mentorship for free now in hindsight. The community is open. Students who are willing to share with you from what they've learned can share with you. If you have questions and I happen to be on, I might answer them. Okay, but everything is here for you. I put stuff on Twitter of people's testimonials about how they just watched the YouTube and they became profitable. You can do that too. I promise you, you can do that too, especially with this video. I mean, this video is it, guys. You've got to identify the trend, okay? You've got to find something for price to take out, whether it be this low or whether it be a low that happens to be right here. Wherever it may go, mark out multiple invisible zones. Take the ones that follow the trend, ignore the ones that don't until they change trend externally, and then start to follow that trend. And be patient, thinking like an investor. That is what the invisible zone is. It's the spot where fear and greed collide and there's a battle, and we see who's going to win by looking at the internal structure and looking for double valid pullbacks, triple valid pullbacks, big reactions. Okay, that's pretty much it. I would like to also at the end of this just take a second to thank Cam for all of his hard work. I see all of you thanking me for the mentorship, thanking me for everything I've done. I would really appreciate it if you guys would show Cam some love. He did so much. The server would not have been able to run without him. I want to thank Matt for making the Safe Place server. You guys, please be kind to each other. Remember, you're stronger as a team. I hope that you use the community to work together. I would love to stop by sometime and see that you guys are on the live charts, mapping out price together, all making sure that you see the same thing. That would be amazing to see. That's what I hope for all of you. If other people rise up and they start to try to teach the invisible zone with their own groups and stuff, just beware. You know, even if they claim my name in the future, if this happens, that doesn't necessarily mean that they have an understanding. Make sure that anyone who's teaching you my teachings has the philosophy down first. If they have the philosophy down, then they're probably a good person to learn from. But if they don't have the philosophy down, then they're probably not a good person to learn from. Be respectful. Don't bug the hell out of people, but just be a part of the community and be hungry to learn, and you will learn. There's information here for you to learn if you're hungry for it. All right. Peace out.